If there is one question asked the most in trading, it is, why do people lose money? And how do some people make money consistently? Michael Covel's book, Trend Following, gives a direct, blunt, and data-driven answer to this question. This book does not talk about any magical indicator. It does not claim to predict the future. Instead, it teaches you to accept the market as it is. Trend Following says, your job is not to be right, your job is to make money. In this video, you will learn what trend following really is, why big traders do not predict the future, the power of embracing losses, how to consistently make profits without knowing the future. This is a story of discipline, patience, and flowing with the market. Part 1. What is trend following? A mind-changing start. Michael Covel gives a major shock first. He says, if you are trying to know the future, you have already lost. Trend following means trading in the direction the market is going. No guessing, no predicting, no relying on news. Only price. Why do people get stuck in the wrong places? The book explains that most people try to catch the bottom, try to sell at the top, buy falling stocks in search of a bargain. But trend followers don't do this. They say, what is going up will go higher, and what is going down will go lower. How does a trend follower think? A trend follower's mind works differently. They do not ask, why is it going up? Should it fall now? They only ask, is the trend up? Is the trend down? That's it. If up right pointing arrow buy, if down right pointing arrow sell, if unclear right pointing arrow do nothing. The illusion of knowing the future. Michael Covel clearly says, no one knows what tomorrow will bring, and anyone who says they do is lying. Trend following ends this illusion. You don't need to be right. You just need to be disciplined. Make losses your friend, not your enemy. The book teaches that loss is not the enemy in trading. Trend followers take small losses, let big profits run. They are not emotional about losses. Covel writes, if you fear losses, you will never make big money. Repeatable system. Trend following is not a single trade. It's a system. Same rules, same risk, same exit, over and over for years. This is why trend followers can work in stocks, commodities, currencies, crypto, in every market. Key takeaway of Part 1. Part 1 teaches you that trend following is not prediction. It is discipline. It breaks the ego. It teaches patience. This is where your thinking starts to change. Part 2. Trend following's rule-based system, rules over emotions. In Part 1, you understood that trend following does not predict. It accepts the market as it is. Now in Part 2, Michael Covel introduces the rule-based system that separates trend followers from ordinary traders. Why are rules important? Covel clearly says, anyone trading with emotions will not last long in the market. Humans get scared, greedy, and impatient. But rules never change. Trend followers trade not with their mind, but with the system. The first rule of the system, price is everything. In trend following, news does not matter. Company fundamentals do not matter. Expert opinions do not matter. Only price matters. If price is going up, there's no need to know why. Covel writes, don't try to understand the market. Follow the market. Entry rule breakout. Trend followers enter when price breaks old highs. This means the market itself is showing strength. They don't buy cheap, they buy strong. Exit rule. Leave when trend breaks. A trend follower's greatest strength is exiting without regret. As soon as a trend weakens, they exit. No hope, no prayer, no let's wait a little. Risk management, the backbone of the system. Covel repeatedly says, how much you can lose is more important than how much you can make. Trend followers take small risk per trade. Risk a small part of the account. Never go all in, because one wrong trade should never wipe you out. The game of consistency. In trend following, 6 out of 10 trades may be wrong. Even the 7th of may be wrong. But 1 to 2 big trends cover all losses. This is why following the system consistently is necessary. Keep ego out. Covel strictly says, if you want to be right, don't trade. Trend followers, don't argue. Don't fight the market. Keep ego aside. They say the market is right, I am not. Key takeaway of Part 2. Part 2 teaches, rules are above emotions. The system protects you. Ego is the biggest enemy. Consistency is true strength. This is where trading stops being a game and becomes a profession. Part 3. Why trend followers are not afraid of losses. The power of losing. If there is one thing that ruins most traders, it's the fear of loss. Michael Covel explains the bitter truth of trading in this part. Running from losses is the real loss. Covel clearly writes, every successful trend follower went through a long series of small losses. Trend followers, do not take loss personally. Do not see loss as a mistake. Treat loss as an expense, just like in a business. Ordinary trader versus trend follower. Ordinary trader fears losses, removes stop loss, prays, averages down, trend follower, exits on loss, focuses on the next trade, keeps no emotional attachment. Why small losses are necessary. A rule of trend following. A small loss today is better than a big loss tomorrow, because the market is always right. If the trend does not work, exiting is smart. After a loss, here the book teaches an important lesson. Trend followers, do not change the system after a loss. Do not trade for revenge. Wait for the next opportunity. They know no one knows where the next big trend will be. The illusion of winning percentage. Covel breaks a major myth. You don't need to win most trades. Trend followers often win only 30 to 40% of trades. But winning trades are very big. Losing trades are very small. This is how money is made. No fear of drawdowns. Every system experiences drawdowns. Trend followers accept this. They know temporary losses do not mean failure if the system has worked long term. Emotional neutrality. Covel says, the biggest goal is not money, it's emotional neutrality. Trend followers, don't jump on wins. Don't break on losses, only follow the next rule. Key takeaway of Part 3. Part 3 teaches, fear of loss is weakness. Loss is a ticket to trade. The right system handles loss. Big money is made by enduring losses. Part 4. How big trends are formed and how trend followers catch them. Now you understand. Trend followers do not predict. They are not afraid of loss. They follow rules. The most important question now, how are big trends formed? And how do trend followers spot them? Trends do not form suddenly. Michael Covel clearly says, no big trend forms in a single day. Big trends form slowly. First, no one notices, then some notice, then the media covers it, and finally the general public comes in. Trend followers enter early, not with the crowd. The real reason for a trend. In trend following, knowing the reason is not important. Covel writes, knowing the reason for a trend is as useless as naming every raindrop. Sometimes, economic change, supply-demand, policy, fear or greed, but the trend follower only looks, is price going up? Breakout, the first signal of a trend. Trend followers catch trends through breakouts. When price breaks old highs, resistance is gone, demand is clear. Here the trend follower enters. They don't look for cheap, they look for strong. It's too high now. The biggest lie. Covel calls this the most dangerous thinking. What is going up can go higher. Trend followers, do not think expensive. Do not think it should fall now. They just follow the trend. Patience, the soul of trend following. Big trends, not weeks, not months, but years long. Trend followers, don't cut profits early. Don't fear small retracements. They know one trend can cover 100 small losses. Exit is equally important. Trend followers, stay with the trend. Exit as soon as trend weakens. No regret, no greed. Covel says, there is no such thing as a perfect exit. Real-world examples, spirit of the book. The book shows commodity booms, currency crashes, stock market rallies. In all these, trend followers did not predict, they just caught the trend. Key takeaway of Part 4. Part 4 teaches, trends form slowly. Knowing the reason is unnecessary. Breakout signals trend. Patience is the greatest weapon. Exiting as trend ends is strength. Here, trend following becomes different from ordinary trading. Part 5. Why trend following works in every market. So far you have seen, trend following does not predict, accepts loss, catches big trends. Now the question, does it only work in the stock market? Michael Covel's answer, no. Same rules, every market. Trend following works in stocks, commodities, forex, futures, even new markets like crypto. Why? Because every market is made of humans. And humans, fear, greed, follow the crowd. Human behavior never changes. Covel writes, markets change, but human behavior does not. Trend following is based on this psychology. When people fear, right pointing arrow trend goes down. When people are greedy, right pointing arrow trend goes up. Profit on both long and short. Ordinary investors make money only when it goes up. Trend followers, long on up, short on down, so they make money in both bull and bear markets. Oil drum commodity and currency trends. The book shows oil, gold, wheat, currency crashes. Trends lasted years, caught by trend followers. No prediction, no news. Freedom of time frame. Trend following does not require day trading. No screen sticking needed. You can trade daily, weekly, monthly. Any time frame works. The true power of diversification, trend followers. Don't rely on a single stock. Don't rely on a single sector. They take small risks across multiple markets. So one big trend can change everything. Media versus trend followers. Covel says, media is always behind. When media talks about trends, trend followers are already inside. Key takeaway of Part 5. Part 5 teaches, trend following is universal, based on human psychology. Rules are the same in every market. Long and short both make money. Diversification provides safety. Part 6. How money is managed in trend following. Survival first. Michael Covel repeatedly says, the first goal in trading is not making money. It is survival. If you do not survive in the market, no trend will work for you. This is why the heart of trend following is money management. Position sizing. How big a bet? Trend followers never ask, how much can I make? They ask, if wrong, how much will I lose? Per trade, only a small portion of the account is at risk, often 1% or even less, because one trade should not have the power to wipe you out. Risk first, profit later. In trend following, exit is determined before entry. Stop loss is set first. Risk is known in advance. Covel says, if you don't know in advance how much you can lose, you are not ready to trade. Sizing according to volatility, trend followers. Smaller positions in volatile markets, slightly bigger in calm markets, meaning consistent risk across markets. Many small bets, one big winner, trend following. Does not rely on a single trade. Takes many small bets across markets. Why? Because no one knows where the next big trend will come from. No fear of drawdown. Covel clearly says, drawdown is not a sign of a bad system. It's part of trading. Trend followers. Do not panic during drawdown. Do not change the system. Reduce risk. Distance from leverage. The book clearly warns, leverage does not make you rich fast. It destroys you fast. Trend followers. Use limited leverage. Avoid overexposure. Capital equals oxygen. Trend followers treat capital like oxygen. If it's gone, the game is over. Hence, capital protection first, profit later. Key takeaway of Part 6. Part 6 teaches, survival is the most important. Position sizing is the real weapon. Risk is determined first. Drawdowns are normal. Leverage is dangerous. Capital is life. Part 7. Trend following versus news, tips, and experts. Now you understand that trend following is a game of system, risk, and discipline. Michael Covel now breaks a huge illusion: news, tips, and so-called experts. Why news is useless? Covel says, news is always late. When you hear news, the market has already reacted. Big players are already in position. Trend followers ignore news because price speaks first, news comes later. The media trap, TV experts. Change the story daily. Give reasons when markets fall. Make excuses when markets rise. But no one knows in advance. Covel writes, if experts really knew, they wouldn't be on TV. Tips, the most dangerous thing. Taking tips is considered the biggest sin in trend following. Why? Because tip doesn't give entry, doesn't give exit, doesn't give risk, doesn't give responsibility. Trend followers follow their own rules. Do not borrow opinions from others. I got it. The ego trap. Covel calls it the intellectual ego trap. When a trader thinks, I understand the market. This will fall now. This price is wrong. Losses start from here. Trend followers. Don't try to understand the market. Follow the market. News versus trend. Real example. The book shows, despite bad news, the market went up. Despite good news, the market fell. Trend followers. Don't look at news. Look at price. And price never lies. Opinion-free trading. The greatest strength of trend following is no opinion. No bull, no bear, only up, right, pointing arrow long, down, right, pointing arrow short. That's it. Key takeaway of Part 7. Part 7 teaches, news comes late. Experts are not reliable. Tips are the most dangerous. Ego eats money. Price is the ultimate truth. Here, you become not an ordinary trader, but a system trader. Part 8. Patience, time, and mental toughness. Why most people quit. So far, you have seen that trend following looks easy, but is mentally very difficult. In this part, Michael Covel explains why most people fail at trend following. Time is the biggest test. In trend following, there may be no big profit for weeks. Many trades can result in consecutive losses. Sometimes there is flat performance for months. This is where most people give up. Covel says, people don't quit the system, they quit waiting. Humans want instant results. The human mind wants a quick reward, wants to be proven right immediately. But trend following works slowly, works quietly, works over the long term. This conflict is what breaks people. Boring trading is the hardest. Covel states a truth. Successful trading is boring. Trend followers, do not look for daily excitement. Do not trade every day. Do not stay glued to the screen. And this is exactly what people do not like. The same task again and again. The same rules. The same system. The same entry. The same exit. In trend following, there is no creativity, no ego satisfaction, just discipline. The mental burden of drawdown. Even when the system is correct, the money is seen decreasing. People around you make fun of you. You start doubting yourself. This is where trend followers prove themselves different. They know that drawdown is temporary, the system is permanent. Loneliness. A trend follower does not walk with the crowd, is alone at the start of a trend, thinks opposite to the media. Covel says, if you cannot walk alone, then trend following is not for you. How is mental toughness built? Trend followers remind themselves repeatedly, trust back-tested systems, draw strength from past data. They know the market might look different today, but human nature hasn't changed. Summary of this part. Part 8 teaches you, patience is the real test. Trend following is boring. Waiting is the most difficult skill. You will have to walk alone. Belief in the system is essential. Part 9. Real results and the world's greatest trend followers. Proof, not promise. By now, you have understood the philosophy of trend following, its mindset, its system, and patience. Now, Michael Covel presents the strongest thing, proof. Trend following is not a theory. It is a method that has worked for decades. Turtle traders, the biggest evidence. In the book, Michael Covel tells the story of Richard Dennis and the turtle traders. Richard Dennis proved that traders can be made. They are not born. He chose ordinary people, taught them trend following, and let them trade with real money. The result? Many turtle traders earned millions of dollars. Same system, different people, Covel explains. All turtles had different mindsets. They were from different backgrounds, but the system was one. This proves that the system makes money, not the individual. Big market crashes and trend followers. The book shows that during the 1987 crash, the dot-com bubble, currency crises, commodity cycles, in all of these, ordinary investors were ruined. Trend followers made money. Why? Because they were already in position, could short on the downside as well, were not afraid of the news. Decades of performance, trend following, in 10 to 20 years of data, in different markets, at different times, has continued to work. Covel says, if something works everywhere and all the time, it is not a coincidence. Evidence, not faith. Trend following does not run on trust, not on belief, not on emotion. It runs on data. This is why trend followers do not become gods. They follow the system. Silent winners. Covel says a profound thing. Trend followers do not make noise. They do their work. They do not appear on TV, are not seen on social media, but they earn quietly. Summary of this part. Part 9 teaches you, trend following has a history. Turtle traders are proof of it. The system is bigger than the individual. Money is made even in crashes. Evidence speaks, not promises. Part 10, the ultimate truth. Trend following is not just trading, it is a life philosophy. Now that you have completed the entire journey of trend following, Michael Covel says one final, very deep thing. Trend following is not just a way to make money in the market. It is a perspective on looking at life. Life and markets, the same rule. Just like the market, life is uncertain, not in our control, full of ups and downs. Trend following teaches us, accept what is happening, leave what is not working, and flow with what is working. No stubbornness, no ego, no complaints. Drop the ego, embrace reality. Covel repeatedly says, the person who wants to be proven right cannot win for long. Trend followers, do not harbor egos. Do not form opinions. Accept reality. The market is not wrong. Our thinking can be wrong. Patience equals the greatest weapon. In trend following, no dream of getting rich instantly. No expectation of winning every day. It is a long race. Covel says, the one who makes time their friend, the market rewards them. Real freedom. Trend following teaches you freedom from others' opinions, freedom from the fear of news, freedom from tips and gurus. You walk on your own rules, take your own responsibility, and accept your own wins and losses. This is true freedom. Survival first, profit later. The biggest message of the entire book. Survive first, then grow. If you stay in the game, the opportunity will come itself. If you stay in discipline, the trend itself will find you. Why can't everyone do it? Covel honestly admits trend following is not easy, not exciting, and not for the crowd. It is for those who can walk alone, who can follow rules, who can wait. Final essence, the whole book in one sentence. Do not try to know the future, follow the present. If you have listened to this video until here, you are already different from 90% of people. Because learning trend following is easy, but understanding and adopting it is something very few people can do. If this video has been able to change your way of thinking even a little bit, then like it, share it, and subscribe to the channel. Tell us in the comments. Are you ready to leave prediction and follow the system in the market? I will continue to bring such real, deep, and honest trading books for you. Thank you. Stay disciplined. Stay alive.